Market Focus. Welcome to Market Focus. In this week's video, we'll analyze the Forex market, highlighting the most important economic news, how these developments might impact major currency pairs, and the key technical levels to keep an eye on. If you're new here, we talk about trading, investing, and ways to stay on top of market-moving news. In today's episode, we'll look at the major Forex events of the week, discuss how they may influence currency movements, and do a quick technical analysis on some popular pairs. Remember, this is not financial advice, just educational content to help you with your own research. Let's jump in. Let's start with a rundown of the most important economic releases and central bank events to watch. Central bank statements, FOMC comments from the US. Any fresh hints regarding interest rate adjustments or changes in the Federal Reserve's policy outlook could spark volatility in USD pairs. ECB and BOE updates from Europe and the UK. Speeches or policy remarks from European Central Bank and Bank of England officials can influence EUR and GBP. Inflation data, US CPI and PPI figures. If inflation cools faster than expected, traders might begin pricing in fewer rate hikes, weighing on the dollar. Conversely, stronger than expected inflation can reinvigorate hawkish expectations. UK CPI with the Bank of England closely watching inflation, any surprise, up or down, can jolt GBP pairs. Employment and growth indicators. Australian employment. The Aussie dollar is sensitive to labour market data, which can also signal the Reserve Bank of Australia's rate trajectory. Eurozone GDP growth figures can provide insight into whether the European Central Bank remains on a tightening path, or if it might pause. Trade balance and retail sales. China's trade balance. As a global economic driver, strong or weak data from China can affect AUD and NZD, given their export relationships. US retail sales. A key measure of consumer activity that can shift expectations for US economic health. These releases are the catalysts that often move the Forex market, so, mark them on your calendar. Alright, now let's discuss how these events might shape market sentiment and influence currency pairs. Starting with the USD outlook. If the Fed signals additional hikes due to sticky inflation, the dollar could strengthen. But, any dovish language or cooler data might lead traders to rotate into higher yielding or risk-on currencies. Now for the EUR and GBP outlook. For the euro, watch for Eurozone growth data and how the ECB frames inflation risks. A strong reading could bolster the euro if markets see more rate tightening ahead. As for the pound, it's highly reactive to inflation numbers and BOE commentary. Persistently high UK CPI might drive rate hike expectations, supporting the pound. Moving on to the AUD and NZD outlook. Australia's job numbers and China's data can drive the Aussie. Strong Chinese demand or positive Aussie employment figures often lead to Aussie gains. Lastly, let's touch on the JPY and safe haven sentiment. The yen is influenced by risk appetite. If markets turn risk off, the yen may strengthen. Conversely, a broad risk-on mood can weaken the yen as traders chase higher yields elsewhere. Now let's take a look at a few major pairs to see where the key technical levels stand. Alright, let's dive into the EUR-USD pair. Support is currently around the 1.0800 area, while resistance is sitting near the 1.1000 zone. The pair seems to be flirting with its 50-day moving average. A clear break above that could suggest some bullish momentum, but if it drops below the 1.0800 support, it might open up room for some downside. Now, as for the MACD and RSI, they're hovering near neutral territory right now. So it's worth keeping an eye out for a crossover or any divergence, especially if there's an unexpected news release. Definitely something to watch closely. Moving on to GBP USD. Support is around 1.2500, with resistance up at 1.2700. There's also a rising trend line from last month's lows that could provide some strong support if it gets tested. Oh, and don't forget the Fibonacci levels. A retracement from recent highs might find the 38.2% fib near 1.2550 as a key level to watch. As for catalysts, keep an eye on UK CPI data or any commentary from the Bank of England. Either of those could trigger a break of these key levels. So, yeah, stay alert for that. Finally, let's talk about USD JPY. Support is sitting at 137.50, while resistance is up at 140.00. Now looking at the indicators, the RSI is approaching overbought territory. That suggests a bit of caution for the bulls, but hey, if there's a breakout on strong volume, we could see prices push even higher. And of course, keep an eye out for any shifts in Fed policy stance or changes in global risk sentiment. Either of those could send traders rushing into or out of the yen. Definitely worth keeping that on your radar. Alright, let's take a look at the AUD-USD pair. Support is sitting at 0.6700, while resistance is up at 0.6800. It seems, the price might be forming a wedge pattern. A breakout above 0.6800 could aim for a target of 0.6900. On the flip side, a break below 0.6700 might indicate further downside potential. Now, fundamentally speaking, Australian jobs data, along with China's economic reports, could really spark some momentum here. With a packed economic calendar, it's super important to keep a few things in mind. First, use stop-loss orders. Volatility can spike quickly on major data releases, and you'll want to keep your risk in check. Second, avoid over-leveraging. Even if you've got the right market bias, a position that's too large can get whipsawed by those sudden price spikes. Third, plan your entries and exits. Don't just jump into trades blindly. Wait for the actual data release or some solid chart confirmation. And finally, stay flexible. Sometimes the market's reaction doesn't follow the textbook scenario, so be ready to adapt if the price action doesn't align with your initial expectation. And that wraps up our breakdown of the Forex market for this week. We've covered key economic news and shared some quick technical insights on the major currency pairs. If you found this video helpful, don't forget to like and subscribe for more market updates. Oh, and let me know in the comments which currency pair you're most focused on right now. Thanks so much for watching and happy trading. Thanks for watching. Don't forget to subscribe and ring the notification bell so you never miss an update.